Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Sorry for the delayed start. So there was a technical issue. So I'll just quickly explain to you how exactly we can do the Tracking the Forex Market Together webinar. Okay. Thanks, Mont, for all the help. So let me display the PowerPoint presentation. Tracking the Forex Market Together Part 2 on March 25th between 14 and 14:45 GMT. So I was giving Part 1 between 9 and 9:45 GMT. So I just taken some calls and taken some positions. I'll explain to you what happened to those positions, and also I will relate it to that of the market condition during that of the European and the US sessions, and also relate the highs and the lows or new lows which are formed, and also take some trading decisions for this particular session. So I'll just give the link for the live market page. Also focus the camera over that of the live market code page. So currently you come across Euro is trading around 1.4114, 1.411614. 1.4113 has become the new low. Earlier low was 1.4151. Subsequently, they formed 1.4141 during the European session, and again they breached it. And the high is not been breached. Now about 62 pips negative net change is seen. And in the case of GBP, during that of the European session, 1.6055 was the low which was set. Now you find ask comes to that of 1.6055. We have to see whether they are going to breach and form the new low. 68 pips negative net change is seen. So if they don't breach and go up, then it is referred as a false move when they are not altering the low. And in the case of Euro, they made the drop and made the downward stop. And after the announcement of the US GDP, final GDP, so they had dropped about 50 pips from there, or about 40 pips. So, but in the case of GBP, they came close to that of 6055, but they are not still breaching it. Let us see. This about 30 minutes past of the US session, and only in the case of Euro they made a downward move and cut the earlier low 1.4114 by 1 pip, and they are holding it around there. And Yen, they made a nominal gain, and in the case of CHF they just gained some more levels and gone up. And in the case of Canadian dollar, it is hovering around in a small range. And Australian dollar, they formed the high 1.0250 earlier and formed a new high 1.0253, and the low is intact. These are all the current levels we come across when compared to that of the European session. So I'll explain to that of the trades what I have taken during that of the European session and what happened to those things. Now I kept a buy order at 1.4152, and when the market was around 4162.63 level, 10 pips below that, and before the close of the webinar that got filled, then they came down to 41.43 and 44 level and went up again. Then I kept a 30 pip stop, and subsequently when they have gone to about 41.76.78, I kept stop at entry and removed the stop 30 pips below kept there, and subsequently found that it was not going still higher. Then I closed it before that of the GDP data release, because any data release, then they could make some volatile moves. So it is better to close the positions before that when the profit is seen, or use a trailing stop. So I simply closed it around 41.72 with 20 pips profit. Then I kept a buy limit order 1.6056 because 1.6055 was the low still. And now they have cut the low in the case of GBP by 1 pip. Now 60.54 has become the low, and I modified because it was not filled, and I took a buy position at 1.6072 with a stop of 30 pips, and subsequently when they have gone to 60.80, 60.85, I kept stop at entry, and I found that the earlier initial low was 1.6100, and they just went up by about 2-3 pips and hovering around there. Then I found that they are not going to sustain there, and I simply closed it around 61. So this is how they just go up to that of the initial low and then come down. So it is better to book profit, and then subsequently we can review it for the next session. So I booked the profit there. Then I kept a sell limit order in the case of Euro GBP 88.25, and it was not still filled. Still, it has not gone down or gone up. So currently Euro GBP is hovering around that of 0.88 or 0.878992 level. So it is not being filled. And in the case of Euro CHF, I kept a buy limit order because the initial high was 1.2897, and then I kept a buy limit order 1.2915, and they towards the close of the European session they came down quickly and filled it, and I kept a 50 pips stop below that because I explained that I will give the call with regard to the crosses and how to trade the crosses during this Tracking the Forex Market Together webinar. And that got filled, and currently Euro CHF is trading around 1.2923, 1.2926. So the nominal profit is seen about 7-8 pips, and once about 20 pips profit is seen during that of the mid-year session, I'll try to keep stop at entry and carry the trade during that of the European session. So these two trades have been closed with a nominal profit. So now let us review the market for that of the European session. So before going to that, I wanted to give you with regard to the market timings. So US session now after the daylight saving system starts by 13:30 GMT. Now we are around 14 GMT, 30 minutes past that of the US session. And the gap time before that is 13 to 13:30 GMT. And now the US session will get over by 20:30 GMT. 20:30 to 0030 GMT is the gap time before the start of the next session. During that time only, they have been making big moves in the case of USDN and USD CHF last week. Now, coming to that of the factors to be considered for trading. So we have to track the market using the GMT time instead of our local time, so that it is easy for us to communicate with anybody in terms of GMT time, and instead of using the local time. Then subsequently, you have to identify what part of the session we are. These are all the sessions, Japanese, European and US sessions are followed by that of the big players. So we have to follow those timings so that we'll be able to understand their market moves. So we will try to track the market using their timing and also their type of moves. So both are their ideas. So when they do this sort of moves, we know what they intend to do next. Because in the market or in the financial market, the only way to earn money is being cunning. So one has to be smart enough. So anybody is trying to sell you some product, you know that there is a hidden profit in it, and he is not going to openly discuss with you, okay, I am keeping about 1% profit or 5% profit and things like that. Besides cheating, giving furious things and things like that, normally the profit is hidden. So in financial market, this is part of the game that they will try to make a cunning move to start with and subsequently make their intentional move. Keep that in mind. And during the gap time, they make such cunning moves, which I call it as a false move or the stop and move. Then session start and session close times, they handle the majors. During the mid sessions, they handle the crosses. So if you want to trade in crosses, you have to choose the mid sessions of each of the three sessions, Japanese, European and US sessions. And if you are trading in the case of the majors, then you can try to take the start of the session or end of the session. Now we are the start of the US session. So we will just identify some trade possibilities in the case of the majors as well as some crosses and see what happened to them. So make a note of the initial highs and the lows which are set around 3:30 GMT. During the earlier webinar, I showed what are the initial lows and the highs, and now because lack of time, so I am just cut short that particular part of it. So we have to note down the initial low and the high which are set around 3:30 GMT during that of the Japanese session, and that has to be related to that of session to session, like European session and US session. Then we will be able to understand whether they breached the high and gone above or breached the low and gone below. Then we will be able to identify what sort of moves they are trying to do in each session. Then identify a currency pair which is making about 40 to 50 pips spread between the high and the low. In such currencies, if you try to take positions, you will be able to take swing trade. You will be able to find swing trade possibilities. If the currency is showing about 15 to 20 pips spread between high and low, currently you come across the case of USDN, the spread between the low and the high is hardly about 35, 40 pips, 45 pips. So after the whole, nearly about 15 hours, you find hardly it is making about 35 to 40 pips. And in the case of Euro and GBP, you come across the spread between the low and the high is almost around 100 pips and more. So that sort of currencies, if you choose, then the trading potency will be, or earning potency will be higher when compared to that of the consolidating currencies. For a prolonged period, they consolidate. So don't have any sentimental attachment to currencies. Identify the currencies which are able to make good swings. That means the volume is relatively good there. So you will be able to get swing trade opportunity. With regard to the entry, so if the market is near that of the low of the session and not breach the low for 30 minutes from the start of the session, then you can try to take a buy position near that of the low. Or if the market is near that of the high, then you can not breach the high for 30 minutes of observation, then you can take a sell. Now if you come across Euro and GBP are near that of the low, and they made a brief downward stop in the case of Euro by about 2 pips, 3 pips, and in the case of GBP about 1 pip. So let us wait for another 7 minutes so that it will become 14:30 GMT. Then we will think of taking a position in them. Then in case if they breach the initial low and stay below that low for more than 30 minutes, or breach the high and stay above there for more than 30 minutes, then we can think of doing a breakout trade, because they wanted to make that extended move on the upside if they are above that of the initial high. Morning I explained how exactly in the case of CHF, the initial high was 0.9097 and they breached that and come to 0.9157. Now they have gone to 0.9160, holding around 91.49. Because of that, I have taken a buy position in the case of Euro CHF, because they intend to gain the levels in that. Sorry. Similarly, if they breach the low and go below, then probably you can do a sell and buy trade, but such trades should be closed within the same session. So with the help of the next slide, I'll show you how exactly we can take the entry decisions. With regard to the exit decisions, morning also somebody has asked the question. I was not able to explain at that time due to want of time. Now exit, if you are taking a buy position near that of the low, then our exit will be always near that of the high. And in case they have breached the initial low and come down below, when you take a buy position, our first target will be the initial low. Like how I closed GBP around 1.6100, that was the initial low. And afterwards they turned down and came back below. And now they made a brief downward stop in the case of GBP, but in the case of Euro about 30 pips they had done the downward stop and for the US session as a fresh session. In order to discourage the traders holding buy positions or trying to take buy positions, they just discourage them, and subsequently they buy all the sells, those who want to sell, and then later on gain the levels very quickly and exit with a profit when the traders come for the short covering. So alternatively you come across, they try to punish the long holders and the short sellers alternatively in the market. We know very well about it. Now with regard to exit, so when you're taking a buy in the new low area, then initial low will be the first target, and if you are trying to buy near that of the initial low, our initial high will be the first target. So this is how we will try to exit out of that, and we will not simply keep a limit order and try to exit out of that, because sometimes we may miss that opportunity of booking profit. So we keep immediately, once the position makes profit, stop at entry, then make it as a trailing stop of 15 pips from that of the market, and keep a limit around that of the initial high. When they go above that, then we can move the limit away from there 20-30 pips each time, and the trailing stop will be continuously rising in order to maximize the profit. So we don't take any chance with regard to the market moves, and we don't simply trust that they will take up the market and things like that. And you know that they are cunning, so obviously they will make the market appear rising. Suddenly they could drop it. So our trailing stop will protect our profit. And they can simply say that there is a breakout event, or somebody has spoken, or there is a rumor and things like that. So suddenly bring in volatility in the market. So we won't be knowing, sitting in one corner of the world, knowing what exactly has happened. Probably about 10-15 minutes, you might be able to see that news get spread out through that of the media. By the time our position would have incurred loss. So we cannot take chances. So we have to use invariably stop at entry, as I explained in my previous trade, what I had taken in European session, and then try to book profit. See, on a daily basis, you come across the profit booking opportunity either in a sell and buy trade or in a buy and sell trade. So it is not that the market is bullish, so I will not take our sell and buy trade, because market means volatility. So it will give profitability with regard to sell and buy trade as well as buy and sell trade. But only thing is the right entry and the right exit, the timely entry and the timely exit are more important in a market. Then for that we need to use the trading strategy effectively by keeping stop at entry once the position makes about 20-25 pips profit instead of taking a loss. And then you prevent the loss once you keep stop at entry. That is the greatest achievement to start with in a trade. And many of the traders have got the tendency to trade without a stop, and probably you should inculcate the habit of keeping stop at entry so that you will not blow up your account. Probably the position will be closed without any profit. It doesn't matter, but you will not simply lose your money, the hard-earned money. So try to be very careful. It is something like when you are walking along the subway, and obviously you will take care of your purse, and you will not just allow anybody to flick it. So it is in the same way, once you have taken the position and see that, don't think that it is a very precious position, you have taken it at a very lowest level, and so avoid keeping stop. In case if you keep stop and they just come down and hit your stop and go up, because of that you miss a lot of opportunities. Don't think like that. If they hit your stop, and you can review it in 30 minutes and see whether they are really taking it up, in that case you can just buy even 20-30 pips above that. Still you will be able to capture the profit. So whether you buy it at 1.4110 and close it at 1.4140, or you buy it at 1.4140 and close it at 1.4180, obviously your profit is 40 pips. So don't give importance to that of the levels. Then once you give importance to that of the levels, automatically you think that your position is very precious, and the players show that it is not at all precious. Then you repent for it. So you only identify, okay, I have to make a profit out of that, and before that I have to keep stop at entry so that I will not incur loss. And damage control is the most important thing with regard to forex trading, or any market trading for that matter. Then entry and exit can be fine-tuned by keeping the limit orders. In the European session, I explained that 10-15 pips below that of the market we can keep, so that when they make swings, we will be able to fine-tune our entry. Otherwise, if we try to buy it at the market, invariably the platform will try to give you a slippage and things like that. And to avoid it, you can keep a limit order, and probably you will get a fine-tuned level of entry. Still, you need to keep stop at entry, and once the position makes profit, and then try to look for the profit booking opportunity. So avoid taking market orders. Then you come across the problem of slippage. Then avoid impulsive decisions while doing it. How to avoid it? So I can simply say that avoid impulsive decisions while trading. When the market is quickly gaining, you feel like jumping into that of the market as if you are missing the bus. But later on you find that you jumped into the bus once it has reached the destination. Then it's of no use, because there it is going to halt. So obviously you need to understand that impulsive trading has to be controlled. How? Because the impulsive trading decisions coming because of the emotional trigger. If you want to control your emotional triggers, then obviously you need to drink enough water and don't focus on the market impulsive moves, and you just look into that of the market 5 minutes, 2 minutes, and just give a break and just have the distractions and things like that, so that it will avoid giving you the trigger. Besides, when you look into the candle, when you come across a big green candle come in, immediately you feel like entering it, or big red candle come, immediately you feel like selling in the market. But probably that after the consolidation, when that quick move happens, the chart will invariably narrow down and magnify the chart, and the red candle will appear very, very big. But if you relate it to that of the pips, it will be hardly about 10 to 15 pips. So now you know that euro made a quick drop from 1.4151 to 1.4112, just about 40 pips. But if you look into that of the chart, it will look like a very big drop. And now they are coming back to that of 1.4140 now. This is how the market is being structured, or the market is being manipulated. So we need to understand that. Hence, I say avoid using charts, because many of the people in the first part asked, see, you are talking without a chart and this is not the room for me and things like that. Because one of the causal factor for triggering the emotions is without understanding how to use the chart. Many of the people use the chart, and there comes the biggest problem. Probably I'll take one day explaining how to view the chart so that it does not trigger your mind. Then probably you will be in a position to use the chart effectively as a guiding factor. So for small traders, at the maximum what I can say is avoid looking into the chart. Instead, you look into that of the live market code page. And if you are really interested in chart, then you need to have a technique of looking into that of the chart, and that should not trigger your fear. Now, in the event, if they breach the high or the low, you have to identify what sort of moves they are doing it. And I explained in my trading system the type of moves, what the players are doing on a daily basis, namely the stop and during session start and session close time, they make an upward or a downward stop and false move or the stop, and they do it during that of the gap time. That is why I identified the timings of followed by that of the players and given it to that of three sessions. You might be wondering, I am following a separate timing when compared to that of the rest of the world. But these are all the timings what I have shown in the previous slide, or followed by that of the players. So if you want to play along with that of the players, obviously we need to know that synchronize our trading with their timings. Then we will be able to understand their moves. Then afterwards, once they go above that of the initial high or the high set in a session and further take it up, it could be an extended move. Then you have to watch for 2 hours. Then they will finish rising it. In the last 30 minutes, they won't cut the high. At that time, you can take a counter trade, sell there, and afterwards, the next day, they will do the intention move. It will be a slow slide for 2 sessions. You can book profit. So they are all being done in a very sequential manner, excepting the extended stop and that they do it once in a month during the trend reversal times. One of the typical extended downward stop and what we have seen in the case of USD yen last week. And then we come across various other inputs like DOA interventions and things like that. But why CHF also made such big downward move and gone up? Nobody has given an explanation for that. So that is how you find that extended stop-ins happen. Then, if it is an extended move, then wait for 2 hours and do a counter trade. If it is an intentional move, wait for 2 sessions. Then later on, take a position. They will reverse the market. They will not continuously drop the market or continuously rise the market. If you simply look into the chart without giving importance to that of the daily and the session timings, then it will appear like there is a big drop happening in the market. That is how slowly they drop and induce the traders to liquidate the long position at the lowest level. It's a question, okay, we are all willing to sell. Who is the fool who is buying in the market at those levels? Then we are selling. Then we will be able to understand they are smart enough to induce the fear in the market and buy it at the lowest level and quickly rise GBP to 1.64 as if nothing can stop it, and then book profit. This is how they do it. So if you understand, after booking profit there, they again dropped it. So earlier, you know that they breached 1.6000 and showed 1.599585 and things like that, as if UK is going to be washed out. And then they took it up to 1.64 and everybody became bullish and everybody said that BOA minute is going to push GBP in a very big way. They dropped it. So they create anticipation of that nature. After the event, they show the true color. So, but the market is in uptrend, no doubt. But when all traders turn long, they will make this sort of drop and induce them to liquidate and then again take it up once the traders turn short. So that is the daily game of the players. That is the earning strategy. Now with regard to that of the trading in the case of crosses, so when you want to trade in crosses, you have to choose the mid sessions because there will be active moves in that of the market. I have already one buy position in the case of Euro CHF at 1.2915 as an example. I just shown it, and now Euro CHF is trading around 1.2931, and CHF Euro is making a slow gain, and so they are not dropped more than 75 pips in the case of Euro. In case if they make more than 75 pips negative net change, then reversal may not happen on the same day. But they had dropped only about 60-65 pips, and suddenly they started reversing now. And now currently you come across Euro is trading around 41.32, 41.30-32 area. CHF has also gone up 91.51, 91.54. So obviously Euro CHF is also gaining from there. Now you find 51 pips positive net change. So this is how, once you take the position, whether it is safe and things like that, you can identify. And once it makes about 20 pips profit, I'll keep stop at a entry like any other typical trade. Then if I want to trade in Euro CHF as a cross, I'll give an example. Then you have to watch the moves of Euro, watch the moves of CHF and see the net change in them. So net change in the case of Euro is 45 pips negative net change. In the case of CHF, it is 64 pips. So when Euro has fallen about 44 pips, obviously CHF will be making about 44 to 45 or 47 pips positive net change, but it is making much more than that. That means they wanted to take up USD CHF still higher level and slowly gain the levels in the case of Euro also. So I'll still keep stop at entry without taking much chance. Then subsequently try to book profit near that of the high. The high is 1.2952. That is my initial target in the case of Euro CHF. And if they break and stay above there, then I'll try to trail the stop and try to see that it goes higher and maximize the profit. So you choose to trade crosses whenever they are making contrarian moves. Many times I explained what is contrarian move. See, now you come across a typical contrarian move happening in the market. I have given the link for the live market code page. You can refer there. USD CAD is showing positive net change and Australian dollar is showing positive net change. So that means USD CAD is showing USD gaining move and Australian dollar is showing USD weakening move. And so this sort of moves are referred as a contrarian move. Whenever they make such contrarian moves, understand that they are handling the cross. Whereas if you see the majors, Euro and GBP are showing USD gaining move and USD Yen and USD CHF are showing the USD gaining move. So the majors are showing USD gaining move. The numerator currencies are showing negative net change and the denominator currencies are showing positive net change. Whereas in the case of commodity pairs, they are showing contrarian move. So that means they are not going to make big moves in the market on the downside, and they wanted to make a little bit of contrarian move and then again make the USD weakening move, because they alternatively do USD weakening and the USD strengthening move. That is the only type of move they can do and make money from that other market. Then you can use the crosses in the event if you have got the holding position in the case of the majors. Say for example, I have got a buy position in the case of Euro 1.4151 and I wanted to hedge it. So you can just use Euro CHF because Euro is numerator in USD, Euro USD, and Euro GBP is also a numerator there in the cross. So you can use it as a hedging. Then take a buy position in Euro USD and sell position in Euro GBP or Euro AUD or anywhere Euro becomes the numerator, wherever the spread is almost same and wherever the net change is almost same, like 42 pips. And there again, if it is around 40 to 50 pips, then you can use it as a hedge so that your usable margin will not get eroded. And you need not straight away hedge it. You can just keep 30 pips below the market, a sell order as a protective hedge order. Then in the case of trading in crosses, you need to be cautious because they can make one-sided moves for a few days, like USD yen, Euro yen and GBP yen. You know that they make 1 or 2 days downward move continuously, so you won't be knowing when they are going to stop. And after accumulating all the buy position, quickly they gain the levels using some data releases. The trigger, it might be US data release, but they will quickly rise USD yen and also rise Euro and GBP as a contrarian move. You'll find Euro yen and GBP yen quickly move up in a very big way. So they can make one-sided move on the upside or the downside for about 2-3 days. So you should be prepared to handle it. And if you use the hedging of 50 pips, then you'll be able to participate either way moves of the market and book profit. Otherwise, you might find it stressful holding the position for a longer time. Many people have got the tendency of holding the yen cross as a buy position so that some platforms offer interest and things like that. They give a very nominal interest but take away your usable margin in a very big way. Be careful with regard to such sort of ideas. If you are smart enough, then you can do that. Otherwise, don't simply follow just because others are telling without understanding how to do that. Then try to enter and exit during stop and moves in the case of crosses. And I explained with regard to Euro GBP position, Euro GBP currency, during the European session, 0.8812 was the high, still is the same high, and earlier it was about 10 pips positive net change. Then I was expecting a breakout on the upside in the case of Euro GBP. I kept a sell order around 88.26.25 level in order to participate only during an upward stop and try to sell during an upward stop and then when they drop quickly, keep stop at entry and trail down and try to maximize the profit during the downward stop and in the case of crosses. That will be the good trading idea in the case of crosses. Because many people have asked about the crosses, so I thought that I can take some time in explaining this. Now with regard to the forecast, Euro and GBP are expected to swing and gain the levels during this particular session. So let us see, that is the forecast. So, but actually they are making small gains now. We have to see whether we can take some trades now. I have already the Euro CHF position with 50 pips stop below that, because in the case of crosses, you have to keep 50 pips stop because the volatility will be very high and because of the lesser volume and compared to that of the majors. Then coming to that of Euro, they have stopped cutting the low and still they are below that of the earlier low, 41.51, which was seen during that of the European session. So that could be the first target, and you can take a buy position once they go above that of 41.51 as a technical trade, or you can just look for a small dip and try to take a buy position. My idea is to try to take a buy position when they make a small dip because they are closer to that of the low, but stop cutting the low for 30 minutes. So, buy a limit order. So currently trading around 36.38. So I'll keep 10 pips below 1.4126 with 30 pips stop. And in the case of GBP, they just briefly cut the earlier low by 1 pip, 1.6054. It is just to create the feel, may not be a big stop. So I'll try to keep a buy limit. $1.5060 because currently trading around 60, 10 pips below with a stop of 30 pips. So any level you can take a buy or a sell as long as you keep a stop of 30 pips. So the assured loss will be only 30 pips, or the maximum. That could be the thing. And once you see the profit in the position and keep stop at entry, there is no loss. So at a given time, we can only take calculated risk. So there is no point in waiting that, okay, let the GBP come to 1.58. That is a strong support level. I'll try to take a buy position. Yeah, that is a good idea. But it is not going to happen today. So that we need to understand. If you are aiming only for about 30-40 pips, then you should be able to see in relation to that of the intraday's lows and the intraday's high. Now in the case of CHF, they are holding above that of the initial high, 0.9097, but subsequently they have just gone up and making small swings, so no trade. In the case of yen, the spread is very minimal, no trade. Australian dollar, the highest level, 1.0267, no selling, no buy. The high they have formed now is 1.0276. It can go up to 1.0350 area. So, but still, buy and sell trade will be very risky for weekend. If you fail to exit or fail to keep stop at entry, we may repent very badly that at the highest level we have taken a long position. So it is only a potency of gaining about 100 pips. For that, we may have to take a very great risk. So I will not encourage anybody doing a buy and sell trade in the case of Australian dollar. And again, it is something like gold, where you find that they just keep on pushing it upwards slowly, and when all the short sellers cover the short, suddenly drop it. Similarly, if they do it, if we don't trade, if you avoid keeping stop and things like that, it will become a disastrous trade. Now in the case of cross 0 GBP, again in the middle level, so I will not take any position now. If it is near that of the high or near that of the low, and also the spread between the high and the low is very less. And similarly, in the case of yen crosses, the spread is hardly about 70 to 80 pips. And you know that instead of taking position in yen crosses, we can straight away take positions in the majors. Like instead of euro yen, we can take position in euro. That will give the same amount of profit, because the yen is non-performing currency at the moment as far as the trading is concerned. So avoid taking positions in the yen crosses for the time being, because it's a quarterly ending. So the banks are very much interested. The bank in Japan, they are very much interested that a lot of people who have borrowed the money 3 years back, they want them to pay it at the lowest level, and instead of earning interest, they are earning premium in the form of the spread, in the form of the strongest yen. When yen was at the weakest level, they just dispute the money and they kept the yen strongest, and they are recovering it back. Instead of interest, those banks are earning substantially with regard to the currency strength and also the variations with regard to the earlier weakness and the strength. So when it was around 118 to 124, they have been giving loan to anybody who is applying to the Japanese bank without even collateral and things like that. Billions of dollars they have given it. And now when it is around 80, 81, they have to repay. You understand what an amount of profit they are earning. So that is the way the financial market functions. So there is no point in blaming anybody. That is the only way money can earn money. So let me minimize the presentation and take up the questions which are asked here. I'll focus the camera over that of the live market quote page, because there is going to be a next session. I have to wind up very fast. Okay. Okay, chart, I explained it. And I'll explain probably in the next webinar or any other webinar, probably a special webinar with regard to how to use the chart and things like that. It might look different, but as a statistics professor, I will try to explain how the chart has to be used. Then what about GBP? GBP is just slowly gaining the level, so they are all intentional moves. When they slowly gain, and if they quickly drop and slowly gain, that means they are accumulating and they are holding it for the long holders to lose the patience and sell it, and then subsequently they want to take it up to book profit with regard to their buys. And that we will be able to see next week. How aggressively for the month end they are just inducing the short sellers to do the short covering in New Age. And probably those who are holding long positions will become jittery and liquidate the long, and later on they will repent that, oh, I could have held the position because of the drop I just liquidated, and later on I find that they really made the rise. So normally till the end of the month they will continue the trend. So that you have to keep it, and only during the month and next week, the fag end, they will try to bring in trend reversal because it is an upward trend right from the start of this particular month. So they will make upward extended stop and before making the drop for the next month. That is how they bring in the trend reversal. During such extended stop and you try to take sell positions, you will be able to really make money out of that. Like the USDN and USD CHF, how they made a phenomenal drop and just recovered it. During that time, if you think that it is a falling knife and things like that, you will not be able to capture the profit. And we need to understand, apply the same rule that if they drop, okay, wait for about 2 hours and see what happens. And if they are recovering it very fast, and they will just create the feel again by making small dips there. At the time you re-enter or enter into that of the market, closer to that of the low, you will be able to really make profit and keep 30 pips stop. And if you are stopped out, you are taking a risk for 30 pips, and if the reward, it can be 200 pips. That sort of trade one should think. If you develop the tendency to keep stop and try to keep stop at entry, you will find they are all excellent trades in the market. Then today you expected 30 pips on GBP and Euro and closed those positions for less than 30 pips. Yes, because there is a barrier 1.61 in the case of GBP, and again, if you watch the market in the live market code page, they gain the levels afterwards, they show the signals. I explained many times that they went up to 1.417275 and they started showing 1.4185 in the ask. And 3 times noted. Afterwards, they started dropping. So if you watch the live market code page, especially with the Saxo Bank code page, you come across that ask become much higher when compared to that of the bid. Similarly, the bid becomes much higher when compared to that of the ask. Many times they showed it, and on a daily basis they show it. And if you see such signal, they wanted to reverse it and just exit out of the position. That's all. So you have to be smart enough looking into that, so that use the trailing stop. In case if you miss it, your trailing stop will protect it, or stop at entry will protect it. So it is not that if you have a rigid idea that I have to book 30 pips profit, if I miss it, it will be a big loss. So there is no preconceived idea that I need to take 30 pips profit. Okay. Then NASCO, instead of buy limit order, is not better just to build a position? Yeah, if you are a position trader, you can average it every about 100 pips, 75 pips drop, and you can just go on taking a mini lots and things like that, and spreading the risk is one of the greatest way of doing position trade. Rather than simply thinking this is a precious level, I'll take all my positions here. If I've got a potency to take about, say for example, 5 lots at a given time, don't take all the 5 lots. You just take 1 lot and review the market. And in case if they are dropping it, then average it every 75 pips to 150 pips depending upon the usable margin. And when you wanted to exit, if you want to exit within the same day or the next day and things like that, every 75 pips you can add additional lot. And don't think that you will miss the opportunity. And in case after taking the position you are able to keep stop at entry and the stop is not being filled, even at a higher level you can take a buy position. They are not going to hit because they are going to rise. They are not going to give any profit booking opportunity for the short sellers. Then they don't do stop-ins on the downside. Then you can even take it 20-30 pips higher than that after keeping stop at entry in the original position, and another 30-40 pips rise also, you can take another position. That way you can spread the risk. And guaranteed, and any given time, only one position will be risk, other positions will be making profit if you use trailing stop. So those trading strategies, I explained it in my trading system. Yeah, Ashish asking about forex trading system. You can ask the questions. If I have time, then I'll be able to answer. At what level can we see GBP? I'm expecting it to go up to 1.65, to be honest, based on my algorithm. And you may come across GBP not dropping, similar to that of Euro, during next month. It will be making sideways move, and it is nothing that I have an affinity to GBP or affinity to Euro and things like that. Nothing to do with regard to the performance of the country or the economic conditions. This is how my algorithm says, and I have seen many times that they just reverse the entire strategy, started gaining levels in the case of GBP and dropping Euro more. And you know, during the upward move in 2008, you would have noticed that Euro went up to 1.60, but GBP went up to 2.11 level. So that is how they do it. In Tamil, any projection for USD CHF? USD CHF is expected to gain to 93 areas slowly, then afterwards it could gain more. And then drop. Did they show that for GBP? No, I am not able to understand. What about Monday false move? Yeah, Monday there will be a false move, and during that of the European session they could make a brief false downward move, and then subsequently they are expected to gain the levels. Did he say that the ask high then? Okay. What do you think about Australian dollar? Australian dollar has become matured, so don't try to take any positions there. No, it will be a high risk trade. That's what I can tell you. No buy and sell as well as no sell and buy, because they are going to make some high level consolidation for a long time. If you try to do sell and buy trade, they may not give profit. If you try to do buy and sell trade, they may give only 10-15 pips profit, and the amount of risk is very high. If you are willing to trade with a tight stop, then you can do it. So no more questions. Let me go back to that of the PowerPoint presentation. Okay. Now, hope you are able to see my slide. Okay. So these are all the positions I just envisaged, 1.4126, but they are not filled it, they are formed up. Probably next round they will make a small dip. At that time I will try to take it. And my Euro CHF position is making slowly the profit. So if you know the initial lows and the initial highs, you will be able to decide the levels very easily. And with the help of chart also we can derive it, but you get a lot of uncertainties because you use different time frames and you draw it from 200 days moving average and things so that invariably it will confuse you, and nobody is going to hold 200 days the positions for them to dump or just push up. So there comes the difference with regard to the chart study. I will probably take one session and explain it. Different type of trades, different type of chart usage should be done. That is the basic objective of using charts. So I take this opportunity to thank everybody who have come here, and also FX Street for the nice provision of the timing to present Tracking the Forex Market Together webinar on a monthly basis as 2 parts during European and US session. And next month again I will just present it, and during that time I will take a different topic. This time I have taken the topic of how to trade the crosses. Probably I will just spend some time and explain how to use the charts in order to do live market trades. So thank you one and all for your patience here. See you again next time. As usual, Monday I'll come with the Asian session live market analysis. Thank you one and all.